In 2026, the Federal Reserve faces some important changes. From personnel changes to rate cuts, let's break down what we can expect in the year ahead and how investors can prepare for what's to come. One thing we know for sure is that Fed Chair Jerome Powell's term is set to expire in May, leaving an open spot for someone new to take his place. President Trump is widely expected to announce his nominee for that role in January. But before Powell's term ends, he still has 3 more federal open market committee meetings to spearhead. This is where the 12-member FOMC panel sets upcoming interest rate policy. At this point, it's unclear whether Powell will elect to remain on the committee as a regular governor or step down altogether. He has the option to hold his seat after his term as chair expires until January 2028. Now, it's not just Powell's seat that's in rotation in January. There will also be personnel changes among the regional Fed presidents. In January, 4 new regional Fed presidents are expected to be rotating onto the panel. There are 5 Federal Reserve Bank presidents on the Federal Open Market Committee, or FOMC, panel at any given time. For context, both the Chicago Fed president, Austin Goolsbee, and Kansas City president, Jeffrey Schmidt, have been notably hawkish and voted against the rate cut in December. But the incoming Cleveland Fed president, Beth Hammack, is also expected to be somewhat hawkish. Hammack recently told the Wall Street Journal that she'd prefer to hold rates steady until spring of 2026. Furthermore, Fed Governor Stephen Miran will also see his term expire at the end of January. So it's important to note that Miran is a temporary Trump appointee who's pushed for deep and fast interest rate cuts. Once his term expires, Trump could reappoint Miran or use that open spot to introduce his nominee for the next Fed chair. All the many changes in personnel are set to add yet another layer of uncertainty on top of an already polarized and uncertain central bank. Last year, instability ramped up when Trump demanded lower rates from Powell, which would reduce borrowing costs and, of course, help potentially boost the economy. But the FOMC held its policy rate steady for the first 5 meetings of 2025 and didn't make its first cut until September. Since then, 2 more 25 basis point cuts have brought the Fed's benchmark rate to a range of 3.5 to 3.75 in late October and December of last year. But the key thing for investors is, how many rate cuts will the Fed be making in 2026? Well, first, it's important to remember that depending on new employment and other economic data, things could shift at any moment. But as of January 2026, here's what we're looking at. According to the CME Fed Watch tool, markets expect the Fed to make 2 quarter-point rate cuts this year, bringing the policy rate to 3% to 3.25%. However, members of the FOMC themselves are more conservative, according to the latest Fed dot plot. The median projection calls for just 1 rate cut this year, but the dot plot also shows quite the range of 2026 forecasts, from rate hikes to drastic cuts. There are definitely some serious divisions on the panel as of now. There is also growing hesitation regarding further cuts from some members of the FOMC, according to minutes from the latest December meeting. Some participants have said they think it would be best to keep the target range unchanged for some time after last month's cut. Investors can expect some clarity on January 28th, as the next FOMC vote may offer insight by revealing where the new rotation of regional Fed presidents stand on rate policy. But until then, investors should be paying close attention to any key economic data released, as that can absolutely affect the Fed's outlook and the overall market trends.